Hey, it's the Beard, the Realtor, back at you again on the video. Hey, so in today's video, we're going to talk about the difference between pre-approved and pre-qualified. What's the difference? All right, stay tuned to find out what that is. All right. Find out the difference between pre-approved and pre-qualified. So what is that difference? All right, tell us, what is the difference between that?
So the difference between being pre-qualified versus pre-approved is when you're pre-qualified, the lender is just taking the consumer's word of mouth, where the consumer is saying, yeah, I make $100,000 a year, and not thinking that to that person $100,000 a year includes overtime and bonus.
Okay.
Yes, I have $50,000 in my bank account.
Okay.
But if that lender doesn't actually verify the income, doesn't verify the assets, then you could potentially be dead in the water, depending on what was disclosed.
Okay.
Now, when you're pre-approved, the lender has actually verified your income, have verified your assets, and they've actually looked through to make sure that, okay, based on your credit, based on your income and your assets, you are approved and ready to purchase a house. It's even, well, in our case, our pre-approval consists of loans being pre-underwritten. So they'll be pre-underwritten to make sure that per our regulatory guidelines, investor guidelines, your loan meets the requirements. So here's your pre-approval. And with that pre-approval, 9 times out of 10, and you can attest to it, that once you have that buyer under contract, it's a sure deal. Because that pre-approval is just so much more solid than a pre-qual.
Got you. So let's talk about this for a second. So now there's a new thing where you guys will take that pre-approval and take it to underwriting before we even go into contract. Is that how the process goes now? Yeah,
pre-underwriting is what we call it.
Okay.
So, they have the underwriters that actually do their full underwriting review, but our pre-underwriting review is essentially the same thing, but it's using a different staff. Where that staff that's actually doing the full underwriting, they're, catered directly to make sure that we're meeting our closing deadlines. But our pre-underwriting team is committed to solely looking at the deal before our agents put the buyers under contract.
Okay, gotcha.
Yes.
Gotcha. And so it's in the best interest of both the realtor, the buyer, that we have a pre-approval letter and not a pre-qualified.
That is absolutely correct, especially in this market.
Gotcha. Okay. And then so is pre-qualified what they did before in 08? Because I think. Gotcha. Okay.
So a lot of pre-qualifications back then and also too when you see, a lot of times, buyers are going to make changes and don't disclose everything up front. But when you have a consumer or buyer that's being honest with everything up front, nothing has changed in a sense to where they didn't change jobs and didn't tell nobody, or you didn't buy a car. As long as everything that is disclosed up front when it was pre-underwritten does not change, then it just gives you a better opportunity for a cleaner process. And even the ability to close a lot sooner, having that pre-underwriting process done.
Gotcha. And so you mentioned something I want to touch on real quick. So once a buyer or consumer is pre-qualified, now how does it affect them if they go out and purchase some new furniture for the house they're waiting to buy, or if they buy a new car because they want to have something to pull up in the driveway with? How does that affect them in that situation?
So what happens is anytime you're purchasing a home, what the underwriter is going to do is do a credit refresh.
Gotcha.
Where they refresh the credit. They don't order a whole new credit report. They just refresh the credit to see what new debts has been acquired since the last time we looked at it.
Okay.
And that's how the underwriter can say, oh, here's a loan for BMW. It wasn't there before. Or here's this loan for Value City. It wasn't there before.
Gotcha.
And that's where you see a lot of deals fall.
Gotcha. And so I guess it's very important for a buyer, consumer, whoever's ready to purchase property to not buy anything.
Don't do anything
before that deal closes.
Don't do anything. Don't change jobs. Don't buy anything new. Don't pull cash out. Your bank, that's also killed deals before. Where a consumer will give because they have the money in their bank, they'll give their kids or whoever $10,000.
Wow.
But that money was help as your assets to help you qualify. So don't make any sudden changes without talking to your lender to say, hey, this is what I have going on. How is it going to impact my process?
Okay, so let's touch on this for a second. We're talking about pre-approved and pre-qualifications.
Sure.
So now, when COVID happened, there was a big uproar of the fact that people losing their jobs. So now, how has the process changed since 2020 to 2022? Does the lender still verify employment a day or two before closing, or how does that work nowadays?
Yeah, so they still verify employment. They still do verifications of employment to make sure this person is still employed.
Okay.
During the COVID crisis, a lot of people did lose their job. Unfortunately, we can't lend money if that person is not working.
Gotcha.
So that is going to have an impact, but it doesn't affect the person from being able to purchase a house once they're back at work.
Gotcha. So we're talking about jobs now. So let's talk about this. So what if a buyer consumer doesn't have a job, but they have a letter from a company stating that they're going to work for that company? Say, for instance, you get a letter from Florida Blue, which is pretty big here in Jacksonville, or they get a letter from Crowley or one of the big companies here saying that they're going to start work here and this is the amount they're going to make. Can they take that as income?
Yes and no.
Okay.
Yes, because we can use that potential income to sell, and we can contingent upon getting a 30 days worth of pay stub.
Okay.
So I had a buyer that we were able to close on it, and within that 30 days, they had to give us their of 30 days of closing. They had to provide us the 30 days of pay stub. So that's not a problem. However, I say yes and no because that buyer has to have 2 years of employment history. So if you've never worked before, but yet now you have a job, you won't be able to get financed because you don't have that 2 years of employment history.
Got you. So let's stick on jobs for a second. So how do lenders handle those folks that are such as myself, 1099, or self-employed like a barber or salon? How do you all handle those folks that are making money? How do you justify that?
That may be another video.
Okay.
No, but so typically we call that self-employed.
Okay.
And a lot of times we all know that when you're self-employed, the goal is to try to have as much deductions to eliminate how much you pay in taxes, right?
Yeah.
That's the goal. However, it hurts us in a sense to where when it's time to get financed, we're looking at that bottom number. And that bottom number in 95% of the tax returns we look at, it's always a negative or a very small number, whereas we can't get you approved for that. Now, sometimes there are ways we can add, certain figures back into it, but usually it's not enough. Like if you're looking to purchase a house for $400,000, but when we look at your bottom number and it's $2,000, like that's $2,000 for the year that we have to factor as an income. Okay. So it's always important that when you know that you're in the process of wanting to purchase a house, that you kind of set a plan to say, okay, in the next 2 years, because we look at the last 2 years tax returns. Okay. So you have to forecast like, all right, in the next 2 years, we're going to buy this house, we're going to buy a move up house, move down house, or just purchase the house altogether. Yep. You want to make sure that the next 2 years that your tax return shows that you're making enough income to support the house that you want to purchase.
Gotcha. Okay.
That's the short version of it.
Perfect. So, as you see, there's a big difference between being pre-approved and pre-qualified. You want to make sure that letter says pre-approved. As a realtor, to be honest with you, I won't even work with you with a pre-qualified letter. I wanted the thing to be pre-approved because it gives me the confidence that I know that I'm working for you and we're on the same page and we're committed to each other, working together. And I'm not just chasing my tail when I get you a house and then you can't qualify for it. So, so that's all I have for today. Anything else you want to talk about with pre-qualified and pre-approval?
Whatever you do, just make sure that you consult with your lender to get pre-approved. Yes. Simple put, like you don't go shopping for a house and a lot of, like you said, you're not going to show anybody a house without having that pre-approval letter. Yes. So the first thing you want to do is talk to your realtor and say, hey, I want to start buying a house. Who can I talk to, or contact your lender and say, hey, I want to buy a house. How much can I get approved for? So you definitely want to do that first.
Absolutely, because a lot of realtors, including myself, I won't show you one house until I see a pre-approval letter.
I mean, especially in this market.
Absolutely.
What seller is going to want a contract with a pre-qual or nothing at all? Like.
Absolutely. Definitely.
I don't even think rookies are doing that.
No, not at all. Not at all. So, where can they get a hold of you if they have more questions about getting pre-approved?
So if you want to get a hold of me, again, my name is Cassandra Dorsonville. I can be reached at 904-903-1183, or you can reach me on my social media handles at New Era Home Sale, and that's on Facebook and Instagram.
All right. So if you like the content I'm putting out on the channel, definitely hit the subscribe button and give me a thumbs up as well. Okay. So I'm the Bearded Realtor, and I'll talk to you soon.